Unprofitable companies provide some of the greatest returns in the stock market, and anyone that disagrees can fight me. I doubled my money in a few months from this overlooked company by using third grade logic, and I'll walk you through my process. See if you can pick up a few tricks. This is for educational purposes only. While sifting through thousands of stocks, I saw this company that dropped 90% and it caught my attention because it used to be profitable. And for those of you who aren't familiar with turnaround investing, it's pretty simple. Let's say you have a company that provides a profitable product or service, but out of nowhere some factor comes out of left field and creates problems that cause investors to panic, and they sell out of their stock, which causes the price to tank. At this point, there are two things that usually happen. One, the stock continues to drop if the issue is permanent, or two, the stock rebounds if the issue is temporary. In this case, this company was in the travel industry, which got impacted by COVID, so they stopped reporting their financials to save money, which tends to be a terrible sign. Up to this point, this is a summary of the only financial information available to us, which begs an important question. How do you research a stock without current financial information? One word: creativity. We know that a stock is a fractional ownership of a business, so if it exists in the real world, then there's information on it. I first used Google Maps to figure out the office they work in. It looked like this, and then I looked at their Yelp to confirm that they were still in business, and they were. However, I stumbled upon a huge crack in the case that skyrocketed my confidence. By a complete stroke of luck, I had a brilliant idea of looking at the website archives, and what I found was absolutely amazing. This is what their old website looked like, and this is what their website looked like in late 2023 when I was researching the company. It was professionally updated. Then I went ahead and looked at their YouTube channel and was pleasantly surprised to see this video, which had tens of thousands of views because they were spending money on ads. Remember, at this point they had stopped filing their financials for 2 years, so it was extremely difficult for investors to know what was going on in the company. On the other hand though, their updated website and active YouTube channel was a pretty interesting indication of improving financial conditions. And then something amazing happened on October 9th, 2023. They published their financials for the first time in 3 years. And there was an interesting twist. As we expected, there was a huge loss in 2020 and 2021 from COVID. However, by 2022, revenue began to climb and they were profitable. So it was at this point I was convinced to buy. The price had already gone from 28 cents to 50 cents a share, but luckily I got in around 50 cents to 65 cents. Unluckily though, it then jumped to 75 cents. I got into a bit of a bidding war here. Because I estimated the stock's value to be around 70 cents to $2 a share, I stopped buying. Within 6 months, the price had rebounded to the average between my range, $1.25, so I sold the shares. Real quick, I need your help. I feel like social media is bogged down by fake gurus, and I want to change that by attempting to bring real quality to the space. So in order for me to gauge if there's real demand, if you want to support the channel, comment interesting topics you want me to cover and consider following. Read the description for more information on today's lesson.